As expected, 2012 was a very challenging, if not brutal, year. Rates went through the floor, fuel prices through the roof, and vessel deliveries were record high. This is a bad combination when your business is to transport bulk commodities around the globe. We were, however, prepared, and we generated a profit before depreciations, EBITDA, of $148 million, which is in the high end of our guidance for the year. In dry cargo, the challenge remains the oversupply of vessels. This was clearly seen in the freight rates, which were 41% below the 2011 levels. Still, Norden's dry cargo department managed to exceed expectations and generated a profit before depreciations of $131 million. A result of strong chartering skills, high coverage, and a constant focus on logistics and fuel consumption. On this basis, Norden's daily earnings were 54% above the spot market and 33% above the one-year time charter rates. I'm particularly happy and satisfied again that we generated $22 million on new activity in such a demanding year as 2012 was. The demand for dry cargo tonnage is actually still good and continues to increase. It grew some 7% in 2012. But this increase was not enough to absorb the record high number of new dry cargo vessels delivered. 98 million tons were delivered in 2012. Even though scrapping fortunately also increased dramatically, the net additions amounted to more than 64 million tons deadweight. And just to put things into perspective, these deliveries correspond to adding a new sizable seafaring nation into the market in 2012 from only the dry cargo ships that were delivered. And this was simply too much for an otherwise fine demand to absorb. The big influx of new vessels also put ship prices under pressure. Norden faced the consequences and already in the first quarter of last year adjusted the book value of the fleet by $300 million. This write-down does not affect cash flow, and it does not change the fact that Norden has been able to generate operating earnings even in a difficult market as last year. Our shareholders should of course benefit from this. Therefore, the board of directors will propose a dividend of 3 kroner per share. This is in spite of the impairment charge and a further $24 million loss on vessel sales, leading to a negative result for the whole of the year of $279 million. In addition to the proposed dividend, we are also initiating a share buyback program of up to $30 million, hence totally returning up to $52 million to our shareholders. In the tanker market, the year started out on a very good note, but came down dramatically over the summer. But with relatively few new ships coming into the market, a reasonable demand, and the Hurricane Sandy, rates came up towards the end of the year. The tanker department was well positioned to benefit from this, and following a good fourth quarter, the tanker department generated an EBITDA of $28 million. This exceeds our guidance from November, and considering the market was not too bad after all. The decent rates in the tanker market continued into 2013, but in general we expect that 2013 will be another challenging year, especially for dry cargo. 2013 is likely to be a time-out year, earnings-wise, for Norden. But this does not mean that Norden is taking a break, by no means. On the contrary, we continue to concentrate on matters that we do influence ourselves. We are continuing to optimize our fleet towards more fuel efficiency. We currently have 18 eco vessels in our fleet on the water or for delivery. Each of these vessels will save between $2,000 and $3,000 a day in fuel consumption. And even though Norden has invested a lot in recent years, particularly in tankers, we are still strong financially. We have cash, securities, and undrawn credit facilities of $690 million today. We are now gradually changing our investment focus from tankers to dry cargo. In 2013, we will take advantage of the attractive new building prices and invest in fuel-efficient dry cargo vessels, either through direct contracting or long-term chartering. So we order the vessels now at attractive prices. They will be constructed whilst the rates are low and hopefully delivered when rates have improved. And we've actually started, as a matter of fact. 7 vessels have already been added to the dry cargo core fleet in recent months. Rates in dry cargo are not likely to improve dramatically in 2013. Supply and demand will slowly begin to balance, but not enough to improve rate levels yet, as the market is still structurally oversupplied. We've prepared for this challenging market with a high coverage of 76% in 2013. Thus, we have secured employment for our vessels at levels significantly above the spot market. In tankers, we expect gradual improvements in the supply and demand balance, and hence a somewhat better rate level in 2013 compared to 2012. And with the coverage of only 27% at the beginning of the year, Norden is well positioned to benefit from the improved spot rates. So in 2013, we expect operating earnings of between $15 and $45 million, a break-even result in dry cargo, and between $25 and $45 million in tankers. In closing, let me say this. Norden stands strong, and we call the shots ourselves. With focus on cost, attention to detail in our operations, and of course wise investments, Norden will come out of this global shipping crisis an even stronger company. Thank you for your attention.